Some of us are conservative investors. We don't like to take risks. And one of the best personal finance practices is to know our risk profile, stay within our comfort zone, and be consistent with investment actions. If you're a young person and you're a conservative investor, it is so important to get your investment mix and asset allocation right. In her early 20s, Akanksha had finished her CA qualification and she found great job opportunities in UAE, so she migrated there. Within a couple of years, she was making close to 15,000 dirhams a month, which is an excellent salary, and she knew from both a career and a life perspective, she didn't see herself coming back to India for the next 5 to 10 years at least. Being an excellent saver, here are a few things that Akanksha was doing with her savings. She was consistently creating NRE FDs every 2 to 3 months with whatever surplus savings she had. Whenever she visited India, her bank would show her several unit-linked insurance plans or ULIPs, and she would pick one to work with. Over and above this, in case she had anything left over, she was lending that money to friends and family. And this situation and this savings plan worked well for her for a couple of years. But after some time, she started facing some issues. So firstly, she was a little overwhelmed by the number of FDs she had, and it was becoming harder and harder for her to keep track of them. She was also a little frustrated with the fact that she had to keep FDs only for a fixed horizon, even though she wanted to save for a longer term. The second problem that she was facing was that her unit-linked insurance plans weren't doing too well. She had expected close to 10% return on them, and what she was getting was maybe around 4%. And when it came to lending to friends and family, it was becoming harder for her to collect money back from people, and she didn't know how long she could sustain this process. Her parents were encouraging her to put in a large chunk of savings into buying a property, but Akanksha, having spoken to her friends who had made a similar decision, realized that this was not her cup of tea. They were struggling with finding tenants, maintaining the property, and since it was something that they were never going to use, they weren't very happy with their decision. So at this point, Akanksha realized that she needed to meet a financial advisor. She needed to talk to somebody who could give her options that were suitable for her needs. So when Akanksha met an investment advisor, she got validation that she was an excellent saver. She had been saving more than 50% of her salary, and that was a really good number to work with. The next thing that she recognized was that there were things more important than tax or equally important to tax to consider when making an investment decision. So for example, she hadn't got her asset allocation right despite being an excellent saver. And in this process of an investment review, she realized that she could consolidate some of her FDs and put in a larger chunk. She also realized that she needed to start investments in equity given her age and her investment horizon. So she began with systematic investment plans or SIPs in large cap equity mutual funds, and this continued for a couple of years. Now in this time period, what happened was Akanksha realized how equity works as an asset class. She became a little bit more familiar with it and she became comfortable with equity. And in this process, she was able to move into different sectoral and thematic ideas, and over a period of time, she was also able to start investing in stocks directly. So this is something that every young investor needs to do, which is to get their asset mix right, get comfortable with some ideas or some asset classes which would involve taking a higher level of risk because you have a longer investment horizon. The easiest way for you to improve your wealth creation journey is to start with an investment review. This worked really well for Akanksha, and I'm sure it will work well for you as well. So get in touch with us and we'll be happy to help you.